Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. I'm recording this just before the market closed. We're in the last 15 minutes of the trading day, and I want to show you what kind of price action we're looking at here. We have a big nothing day, really. The markets are hung. And if you look at the daily chart here, you can see the intraday, we had a rally, we sold it off, we tried to make that recovery, and right now in the last minutes of the trading day, we're starting to turn back down. And so you might have caught my price targets on the midweek report. I'm still keeping those downside targets for DIA at 368.12. And while the markets are, like I said, hung at this resistance area up here, we're having a field day trading in and out of the directional option trades. I'll show you the trade of the week as we get towards the end of this presentation. But we're having a great time, and I invite all of you to come join us and at least learn how to make money in this market. It's really a lot of fun when you're following the charts. I use a 7-point trading checklist. We came up with this years ago. And I look at the candle, we determine whether or not the candle is bullish or bearish. We go right on down the line measuring volume. We look at the price of the stock as it compares to the 20-period moving average. We look for gaps below the market. We look at the oscillators, particularly the Stochastic and the CCI. A couple of weeks ago, I did a video on the CCI showing everyone how to use that. You might want to go back in our library and pick that up because it's one of the best tools, if not the best tool, for predicting the market and selecting your pivot points. And we also look for the role reversal. It's a horizontal line that I draw on the charts. Maybe we could show one here in an example, an IWM or maybe the Qs. But when you have a checklist like this, it makes things a heck of a lot easier because you're taking all the second guessing out of the decision-making process. And so, again, if you're looking at DIA, this little candle right there, let me zoom in for you. That little candle right there at the end of this little up leg is a hanging man, and I point that out quite often. Hanging man candle is bearish. You can see there was one right there. We had a doji, almost a hanging man right there. And what happened? It resulted in lower prices. And so if you learn how to recognize these signals, you're putting the odds in your favor instead of just going with the wind and trading with whatever they talk about on CNBC or some of these other financial programs. So I did an overlay last week showing what the S&P looks like now as it compared to the market back in 2022. And the footprint is almost exact. And it's a carbon copy, as I said last week. Again, go back and listen to that video because each and every week I try to give you a little educational nugget to chew on, and then maybe you could, over time, become a master reading these charts. It's not rocket science, but it will take time and some effort to learn how to recognize the signals. And through this teaching through repetition, because I've always believed that repetition is the best teacher, you'll eventually get it. So again, downside target 368.12. Going on to IWM, you can see right here, my downside target is still at 175.81. That role reversal that I was talking about could even be drawn from back here. Watch what I do. I'm going to take a horizontal line and I'm just going to drop it right there on this low. And you see what happens. The support level here, that was support, was broken here. And what happened? It turned into resistance here, and it's still holding as resistance. Resistance and support levels are not exact, to the penny levels. They're general areas that we watch out for. So if you have the market approaching a resistance level like we see here, and you see the volume dropping like we see here, the drop in volume is telling us that the buyers are losing their momentum, and that's what the sellers look for. The sellers are obviously not going to be selling when the buyers are super motivated, putting their money into the market, right? You're not going to step in front of that freight train. But as soon as the buyers start to weaken, the sellers start to mount up, and they have an inventory of stocks that they sell into the market, and it pushes it lower, right? It's just the ebb and flow of price action. So look down below. This is the key for today. The CCI, and I didn't mention this last week, but the CCI, that blue line, is now crossing below the black line. You see that right there? That black line is the momentum line. And when it crosses down or up, you generally get 2 to 4 days of movement in the direction of the cross. Here's an example. Back here, the CCI crossed down below the momentum line. If you look at where that happened, look at that. We had 4 days of selling activity come in after that. And then what happened? The CCI bottomed out and it eventually showed a buy signal. So if you're trading using that tool, it's going to help you quite a bit. So now that it's crossing below the zero line, I'm expecting 2 to 4 days of downward momentum, again, in the direction of that cross. So we're really not that far away from this support level. As I mentioned also, we're most likely going to see an ABCD pattern forming here. You could even say that the ABCD started back here with an A pivot lower. This green candle was the pivot B in an upward direction. And yesterday we had a lower high, lower low. So there you have a C, which means, and this is what we see all the time, look back here, A to B, B to C, pivot lower to a lower D. We are expecting a lower D here that's lower than the pivot B here. And eventually, I think we're going to just zigzag our way all the way down to that support level, which is from the lows in late March. Okay, so that's IWM. Looking at the Qs, it's basically the tech sector. What do we have? Big red candle yesterday, but we got the pivot point today. This is what I'm talking about. When we define a pivot, that is a lower high, lower low. There it is. Yesterday, we had a half signal. What is a half signal? A half signal is half of a pivot. We had the lower low, right? So it's half of the pivot, but we had a higher high. And so now we have that sell signal coming in the form of the pivot. And now look down below at the volume. This is interesting because now we have a pivot lower on higher volume, which tells us that the sellers are becoming more motivated. Think of volume as being the gas pedal for the buyers or the sellers. If the volume is increasing on the way up, like we see here, we generally get a continued move higher. And then what happens? The volume starts to drop here, and then we get the pivots forming lower. And then again, see the increase in volume on the way down was motivated sellers here. So keep an eye on the volume. A lot of people think it's a lagging indicator. It's not. It is, in fact, a leading indicator. And if you look down below in the Qs, what do we have? Look at that blue bubble right there. That's 0.973. We're only about less than 10 points away from that crossing below the momentum line. And then you have that momentum cross, which will generally lead to 2 to 4 days of downside activity for the Qs. So my downside target on the Qs right there is the dotted line, 417.67. Moving on to SPY, we have, again, a pivot. See that? We have a pivot after a hanging man yesterday. We talked about the hanging man candle, that being bearish. Keep an eye on those hanging man candles and shooting stars and bearish engulfings and bearish haramis. When I talk about those, we're generally taking positions based off of those signals. And like I said, I'm going to show you the trade of the week. That was absolutely a technical play in CCJ where we bought some puts on a sell signal, and it turned out to be a very decent trade for this week in just 3 days. So down below, again, look at that CCI heading for that zero line, not far away. I think that will happen Monday or Tuesday. And then the downside target on SPY is 497.97. Looking at the VIX, what do we have here? We've got an inverted hammer right here. See that? A hammer is when you have a downward movement. Here I'm just representing 3 down days. A hammer looks like this. It's a small body candle with a long shadow underneath. An inverted hammer is the same thing. It's at the end of a downward leg, but the shadow is on top of it. You see that little shadow right there? That is more bullish than bearish. And so what you have here is a pivot to the upside, higher low, higher high on the VIX. Don't worry about the color of that candle. It's the positioning of the candle that's most important. So remember, a bullish VIX is bearish for the S&P. And what we've been doing in recent days, we've been trading UVXY with our option traders. You may have seen some of the shorts that we put out to social media showing those highlights of what we did with UVXY. That's turning out to be a really nice trade, because what we do, we take money from the market by selling credit spreads, and we use the market's money to go buy other options so that we're not digging into our own account, spending the principal of that account. We're using the market's money, and we're putting the market's money to work. All right, let's talk a little bit about the trade of the week. What do we have here? Well, this is what I said. We bought puts on May 27th, and we bought the September 55 puts. Now, if you're not an option trader, don't worry. Understand that puts go up in value when the underlying price of the stock goes down. So they're inversely related. So we bought these puts for $3.30. Now, this is a shout out to our members who are in the Matrix service. When I'm mentioning your stock that we got into this week, take that as a clue. I can't tell you how to trade or when to get out. I could give you my targets. I could give you the strategy. I could talk about the stock. But if I'm mentioning your stock, that's pretty much saying that the trade's over. Take your profit, move on. Well, look what happened. This was trading today at 385 right there. So we're up over 16% in just 3 days. Now let's recap this trade from the very beginning. Remember that CCJ is the ticker symbol, and the 27th is on that candle right there. What kind of candle? That is a shooting star. Now, a shooting star is bearish. And not only is that a bearish candle, but it gapped up twice. One day here, it gapped up on the 23rd, and then it gapped up again on the 27th. Volume dropped the very next day, telling us that the buyers are losing momentum. The oscillators started turning lower. We had a big red candle, and we had a lower high, lower low today. So those puts are trading for around 385. Beautiful trade. Congratulations to all you Matrix traders. And folks, if you're interested in becoming a member, we have a free membership for 2 weeks. So you can follow along with these publications and plug into our webinars and just learn right along with our members and ask questions. You'll have me live. And we have a great time. We have a good group of people in our membership. They're very giving. They share information. They share ideas. And we're just loving life right now in this market. You know, it baffles me. Sometimes I look at the amount of time that people put into being entertained, right? Watching movies on Netflix. That's why Netflix is going through the roof. Subscriptions are up. People are spending a lot of time just for the entertainment. I mean, you got to really think about that. People are putting so much time in the entertainment that they're forgetting where to invest that time to make money. Or maybe they're not forgetting about it, they just don't want to know. Again, I look at YouTube videos that they're showing you how to restore an old car, millions and millions of views, but watching that might be entertaining, but it's not making you money. We're showing you these techniques for trading, and this is making money. So here we are into the closing bell right there on this Friday, May 30th. Folks, come join us. Let us show you how to do it right, how to manage risk, how to have fun, and then you can enjoy the weekends with your family. And thank you so much for liking, sharing, subscribing, commenting. It really helps us drive the algorithms to our channel. And I really have all of you to thank for that. So have a good weekend, and we'll talk to you in the next video. So long.